Hi guys, welcome to our channel The Data Insider. In this video, we are going to show how we would have invested wisely in the year 2003. Before going into the video, we would like to share the history about MSIL. Maruti Udyog Limited was founded by Government of India in 24 February 1918. The main mission of the organization is to build the people's car. In the year 1982, as a technology partner, Government of India collaborated with Suzuki Japan, which resulted in a JV of 44% to Government of India and 26% to Suzuki Motors Japan. In the year 1987, Suzuki has increased its shareholding to 40%. And in the year 1992, due to LPG, Suzuki has further increased its shareholding to 50%. And in the year 2003, government has decided to disinvest from the organization, selling off its 25% of shares. In the year 2006, government has completely disinvested from the organization, resulting in 0% shareholding. And at present, Suzuki holds 56.37% of shareholding in the organization. Now let's go to the analysis factor. The 25% stake sold by the government resulted in the first IPO of Maruti Suzuki. In the year 2003, the IPO value of MSIL share is 125 rupees per share. And on the first day of the debut, the share rose to 164 rupees. And in the year 2006, during government disinvestment, the share price is around 678.24 rupees. The current stock price as on 25th September 20 is 6,497.7 rupees. And the peak stock price in the year 2018 is 10,000 rupees. The face value of stock is 5 rupees. This shows the dividend of stock over the period of time. The initial dividend given by MSIL is 1.5 rupees with 60 rupees at 2020. The peak dividend is 80 rupees in the year 2018 and 2019. We have considered three scenarios and have calculated the value of your investment in 2020. Market, money market, etc. Whereas only 2% of Indians were aware of equity market This when compared to America, wherein they have 50% of people were exposed to equity market. Thanks for watching the video. Do like, share and subscribe.